The latest housing construction data released this morning showing a 3% increase in housing starts in June due to a surge in multifamily construction. However, single-family starts hit an 8-month low. That's according to data from the Census Bureau. This begs the question, when will we see the single-family housing market bounce back? For more, we welcome in Rick Palacios. He's from John Burns Research Consulting, Director of Research. Rick, thank you so much for joining us. First, I want to get your reaction to the data that we just received. What does this say about where we're at currently in the housing market recovery? Because clearly single-family homes are still struggling.
Yeah, so first, thanks for having me. We try not to make too much out of just 1 month's data point, but I think the multifamily apartment surprise was nice to see. The point I make on don't making too much out of just 1 month, I mean, multifamily housing starts are still down noticeably. They're down about 23% year over year, and we expect that to continue. I will say, I think from the survey work we do in the apartment space, as well as from the conversations we have with our clients, that peak bearishness around apartments is probably behind us, which is nice to see. And then obviously if the Fed can move rates lower, that will help. On the single family side, the year has really been for home builders a story of haves versus have-nots. And the point that I make there is really in regards to the big publicly traded home builders, which are about 50% of the market. You've got the biggest one reporting tomorrow, D.R. Horton, versus the private builders. And the point there is that the public builders are continuing to grow in this environment, but they're only half the market. The smaller private builders are probably actually shrinking, losing market share, having a tough time growing in this environment with 7% mortgage rates roughly. And I think that leads to a pretty flattish backdrop for single family housing starts.
So you mentioned mortgage rates. Obviously, those high mortgage rates really hampering this market. The Fed is expected to cut at some point this year, but do you think that's going to be enough to revive this activity?
Oh, I think it will definitely help. I think it'll definitely help on the multifamily side. The storyline, I think, coming into the year was survive until 25. I think that was Barry Sternlicht with Starwood, and a lot of groups are going to survive. And then hopefully we'll get to the end of this and rates start to come in maybe this year, possibly into 2025. That will help. On the single family housing side, I think it will absolutely help. I mean, the advantage that the big public builders I mentioned to or alluded to earlier is that large amount of those can buy down mortgage rates. So market mortgage rates are hovering around 7%. I know they've come down a little bit, but you have a lot of big home builders, the D.R. Hortons, Lennars, really all the public builders for the most part, that they're buying down mortgage rates to 5.5%, under 6%. In certain instances, in certain markets that are pretty soft, they're buying those mortgage rates down for the duration of the loan to about 4.5%. So that's a huge, huge advantage that, again, only the public builders can really do. So that's where I think market mortgage rates do need to come in towards the 6 handle. And when we've seen that historically, there has been a definite pickup in demand, and that will help the overall space, private builders as well.
So here's my question, though, because we still have inventory at very low levels, about 30% lower than pre-pandemic times. So let's say mortgage rates are cut, great. We are still going to deal with these low inventory levels. So isn't that going to keep prices elevated? How can we see any relief on the pricing side?
Yeah, so the inventory story has changed considerably this year. And so if you go around local markets throughout the country, Florida, Texas in particular, but we're starting to see this across most of the Sun Belt, resale inventory is up measurably. It's not only up year over year, which is easy because the year over year comp is super easy. We're back to pre-COVID norms in a lot of those markets. And so these are places where, on going back to single family housing starts, these are places where home builders have been building over the last 2, 3, 4 years. And now I think from what we're seeing in conversations we're having in our survey work, they're starting to slow things down a little bit because they can finally see competition out there in the resale market. So I think that the narrative around resale inventory being non-existent has definitely changed this year. There is definitely more supply out there.
And what areas of the country are you seeing a rebound in activity? I know you just mentioned Florida, the South. Is that still the hot area, or are there any shifts there?
Well, I wouldn't call it hot. It's actually one of the softer places in terms of housing demand right now. Prices are flat to cooling, and we're finding that home builders are actually having to start cutting prices in a lot of those markets. When you go into some of the more inventory constrained places like the West Coast in particular, the Northeast up into the Midwest, those are still very, very strong housing markets. Home builders are having a lot of success there. And a big part of the story is that they're in those places, resale inventory is still pretty tight historically. So when you want to talk about kind of a scratch your head, affordability is horrible right now in many places. Southern California, where affordability is probably the worst, the strongest new home market in terms of the home builders that we talk to and what they're seeing in terms of sales and pricing strength. And a lot of that is actually foreign buyer investor activity that is really targeting these places. And then also you go up into the Bay Area, starting to recover. And I think there's a big tech story there, AI, which is just impacting so many places.
All right, Rick, we're seeing some optimism here. Thank you so much for that. I appreciate it. Rick Palacios Jr., John Burns Research and Consulting Director of Research. Thanks so much for joining us.
Yeah, thanks for having me.